This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com, and I have with me this morning Charles Hugh Smith, well-recognized writer on the web, who is the publisher of the website Of Two Minds. Good morning, Charles, and welcome back to Macro Analytics.
Thank you, Gordon. Glad to be here.
Hope you had a great summer and a vacation. Talking earlier about your vacation, it sounded like it was a standing one.
Well, yes, and I spent all the time in America, and America has tremendous diversity of scenery and cultures, so.
Well, our economy certainly could do with it. That's for sure, Charles. Right now, we'll get into that. Charles, during our last session on statism, we said we would continue with the social unrest theme that we both see as ahead of us, and it was only beginning. And I encourage our listeners who haven't already to listen to our last session. It was a double session on statism with Charles. Social unrest will, in my mind, will be the grease that actually accelerates the ongoing move towards statism that we've shown in our roadmaps. In this year's thesis paper on financial repression, we outlined the growing global social unrest which we expected, and which we first identified in 2011, which is even before the Arab Spring, and it continues to become more and more evident and expected to grow. The Nobel Laureate and economist Joseph Stiglitz is out with a book that outlines that inequality has reached the stage that we can expect it to lead to social unrest. He believes the American dream is now a myth, and like the British Empire, it's an illusion of the days past. And I encourage anybody to have a look at the book. It's quite startling. He has some solutions and some suggestions on it, but the statistics that he lays out are certainly alarming. Corporate profits are at all-time highs right now. But the wealth is just simply not being shared, as he points out, and frankly, this chart I have up here right now shows. And it's not being shared because of, I'll call it, global labor arbitrage for profits. But it's more than that and deeper than that. And the result of it is a complete destruction of the American middle class, in my opinion. And the middle class has long been the engine of the American economy. So when it suffers, the economy is going to suffer. Comments on what I just said, Charles, or this chart that we have up here on the inequality that now see?
Well, Gordon, I think that the topic of social unrest ties in everything that we've discussed previously in this year. And so in a way, it's the culmination of financial repression, statism, and a topic we'll discuss in our next show, marginal return. All the structural problems in our economy are coming home to roost, and they're manifesting in social unrest.
Charles, in case a lot of our listeners are not fully aware of the magnitude of this inequality, we have, and I also just flashed some charts here of the magnitude that's now being reported. We have 107 million people who are now living on some form of government program. That does not include Social Security, nor does it include Medicare. And so in actual fact, we have 165 million who are actually, if you include 22 million government employees, who are actually dependent on state income. But that many people, I'm sure, aren't looking for just government handouts. There's a problem that says it's not allowing them to participate in the American dream. And we have a chart I saw the other day. We had this showing here. Americans who are now below 125% of the poverty level has reached 70 million Americans that are at that kind of level right now. It's just alarming, and maybe more alarming is the rate at which it's growing. And I'm seeing, we've talked about this, Charles, before, is the number of Americans who are coming off the 99, the term of employment benefits, and are moving on to disability roles. And and I certainly would believe that there's some fraud going on in there. But I think that maybe more importantly, than some people are. The fraud is they have no other alternative. They're having to game the system to survive, and are being forced to come up with something that clearly in these charts is saying it's the system or something's broken somewhere. And the other day, and it comes from my vacation and what I saw on my holidays, is the youth today, because social unrest starts because you have inequality. But when social unrest really begins, it always starts with the youth. It's been my experience that we saw it in Europe. We saw it in Tunisia that started the Arab Spring. We saw it in Egypt. We saw it in Spain. It's always been the way. And right now, our youth, because they're not seeing the opportunities, are starting to really get upset. I'm showing just one of a number of websites that I've found where the youth are starting to organize themselves and are doing studies on showing the amount, and I have some statistics here and some here, showing the degree to which their decision-making and the difficulties that they're now facing broad-based, and they're trying to organize themselves into voting blocks. I think these are just the thin edge of the wedge, and we had Occupy Wall Street, but I'm seeing them getting more and more organized, more and more target, and it's to be expected, and that's what we saw coming in our thesis paper. Is any of this news to you, Charles?
No, Gordon, as I mentioned before we started the show, they are extremely reminiscent of Japan and the trends of youth being essentially locked out of marriage, home ownership, child rearing, these kind of what we would take for granted as like the minimum of middle class or even lower middle class or working class life. Those options have been precluded in Japan for many, many young people, and so they've sort of given up on life, and that's the potential danger that we have of losing a generation to passivity and surrender.
People will tolerate inequality as long as they have a disposable income that's allowing them to get by. But when their real disposable income, Charles, is squeezed, as it's being right now, and they can't get or increase it, suddenly issues with corruption, unfairness, crony capitalism become major irritants to them. And then we saw that in Africa, we're seeing that in Europe, and we're beginning to see it here. So the pressure on disposable income leads to the focus on inequality. Both of those lead to the youth then starting to rebel and push for change. And when you've got nothing to lose, you lose it. There's that expression, and so that's what we're seeing here. I have your chart up that you brought with you, Charles, because I think a lot of this supports the points we're making here.
I selected some charts, Gordon, to kind of illustrate the drivers, some of the drivers of the inequality that we're discussing. And I want to start by just saying that there's multiple sources of the inequality. Some are out of the hands of individuals. I mean, globalization and structural problems with our economy. And then there's the other issues, which you alluded to, which is like corruption and malfeasance, the distorted economy. These are illegitimate sources of inequality. And one source of what I would consider illegitimate or inequality is debt, that the middle class has been sort of funneled into borrowing its way to maintaining its income and standard of living. And this chart shows that the bottom 95%, that their debt has skyrocketed, which of course precludes you from accumulating capital. All you're doing is paying off student loans and mortgages and so on. Where the top 5%, their debt load has actually been reduced. Their income has gone up enough that they can actually pay down their debt. And so that divide is feeding the inequality. Gordon, we've spoke about the diminishing returns of a college education, and I think I might have used this chart in a previous show, but it just so graphically illustrates that the cost of college is skyrocketing, but the income earned by people with college degrees is stagnated or actually has been declining. And so the American dream that you spoke of that's ending, that the two fundamentals of the American dream were you get an education, you're going to make a lot more money and have a lot more financial security. And when you buy a house, that's the bedrock of your middle class wealth. And both of those legs have been completely kicked out from underneath the young generations.
And Charles, this chart is based on those who actually got jobs and what their earnings are. If we were to take it by the total population of students who are not working, are interns or whatever, this chart would be much, much worse. So,
oh my gosh. Yeah.
So can you imagine what it realistically, and that's my point on what the youth see out there. We have a huge amount of population of students, of graduates who are now working as intern. And for those that are not familiar, intern means no pay, no benefits. You just get some experience so that maybe you'll get a job later on with somebody who will pay.
Right. Basically a form of slave labor.
I think there's certainly questions some labor laws, but we'll leave that for another time and show, Charles.
This slide shows the civilian employment to total population ratio, and it shows that, in the boom time of the dot-com era, almost 65% of the civilian population had a job of some kind. And now it's back to the 58% level, which was, you'd have to go back to the recession in the early 1980s, before a lot of women entered the workforce. So the kind of numbers in the decline of the job market are rather staggering, and that you go, well, it's only 6-7%, but a 6% decline over the whole economy means that there's 14.5 million fewer jobs than there were a decade ago, and that's a devastating reduction in opportunity. This next slide shows income level from the bottom 90% and in the top 10%, and it shows the average income gains over the last roughly 40 years. And so we can see that the top tiers of the economy have done very well and gained income substantially, but the bottom 90%, their income has actually declined when adjusted for, purchasing power and inflation over 40 years. Their income has been completely stagnant for 2 generations. And so this ties into that debt slide, showing that people have borrowed tremendous sums of money to compensate for a stagnant income. And that debt load is a key driver of the social unrest we're talking about. Many of you are already well aware that wealth is quite concentrated in the United States. And I feel, I'm sure you do too, Gordon. I mean, I feel this slide showing that the top 10% of the households own the vast majority of wealth, and the bottom, 90% own a relatively modest share. And I suppose that just because I own property and have a little capital, that I'm probably in the top 10%, although I don't feel rich, and I didn't do anything special. I didn't inherit a fortune or anything, but just having any assets above a few $1,000s catapults you nowadays in America into being quote, wealthy. And that's something that we've spoken about, that to what used to be a nice chunk of capital or wealth in a house or a small business has been, that's also been eroded and has stagnated.
I have a lot of friends of mine, Charles, who are small business owners. And now, because they have a business, they're classified as the rich. And the taxation that's going to come with that. And none of them feel rich. Matter of fact, all of them feel like they're just holding on. With all sorts of issues and risks, concerns with business in the future. Point out, they would be considered certainly in the top 20 percentile anyway. And they do not feel like they're living the American dream right now.
No, and in fact, Gordon, that's an excellent point, that the social unrest is not just on the underemployed and the unemployed, but also for what's left of the middle class is looking at higher taxes on everything, and so they're getting crunched and feeling angry and frustrated as well, because no matter how much money they seem to be making, they're actually ending up with less in their own pocket.
The Wall Street Journal was just out with a feature article talking about that the upper middle class is now under siege, and showing the squeeze and giving examples of that. And they're under siege because of the cost of their education for their children that they didn't budget as much for, and the children not being able to get employment and then moving home and whatever, and the ongoing costs for these children. And that was the upper middle class. I would go higher than that, Charles. I saw it this summer. I was relating it in a session with John Rubino. This summer, my boat, and I was out in Martha's Vineyard in Nantucket, and it's a moneyed crowd out there, and a lot of these people own their own businesses, so they wouldn't have any kind of issue. But unsolicited, I was listening to them talking about the magnitude of their problems. You say, what kind of problem do they have? Well, they don't have pensions, and they have businesses, and they may have sold them or are selling them. One, they can't sell them and get any kind of money out of it, but some of them have sold it. Now, Charles, at one, what are you making now? 1 or 2% that you can get on kind of returns? They haven't made any money in the last 10 years. So, take a percentage you think they can get realistically. Even the pensions funds right now can't get their 8%. So if you say, okay, 2%, how much capital do you have to pay to write a check every year for a student or a child that needs $60,000 or $70,000, or for any kind of living expenses that you'd counted on having returns of 8 or 9% to pay for? It doesn't match. And the amount of capital that they need is just beyond their reach. So it says they've got to immediately start living off the capital. They're eating their seed corn. That's what they're doing in every case. And when you start eating your seed corn, there's a gnawing feeling and unhappiness that comes into you because you realize how long can I realistically live? And every year as their costs go up, they see it to be shorter and shorter. And that's what came out to me this summer in spades with the people I was talking to.
I think that summarizes the situation for the upper middle class extremely well. And I too have friends that they're looking at their mortgages, they're looking at covering their kids' medical coverage, and so on and so forth, and they're in the red every month.
We've got this social unrest that it's right across. We've got it from those who are trying to get on the first rung of the ladder, the students, as we talked about. And by the way, if they don't get on that first rung of the ladder, we were talking about earlier, we don't get the first houses that are bought. And the whole housing market is predicated on people moving up or being able to sell their homes, and you need that first rung. So we got problems with the students and the low entry. And we've got the middle class that's being completely gutted. We're talking about the upper middle class under siege. And I'm talking about the upper class, the top 20%, the problems they're facing on low interest rates and poor earnings. So there's a disgruntled and growing, I won't use the word anger yet, but major concern out there. And nobody sees solutions. And when you get in this kind of state of frustration, typically start to get social unrest. And I've got to believe that it's coming, and it's going to come very, very hard and very fast in a not too distant future. Do you sense that people are voicing it more and more, Charles?
Yeah, it's an interesting question because it seems that people, perhaps given the level of frustration and the lack of opportunity, you'd think we'd be hearing it more. And so it's maybe it's a private public thing that privately they're expressing their frustration and disappointment, but maybe publicly they're still, the stiff upper lip, optimism and, that kind of thing is still present, like people, they're not gathering and making a public display yet, other than the anti-Wall Street demonstrations. So maybe we'll expect more of that.
I think a lot of the sense I've got is they felt things would come back. That the market would recover, they'd be fine. Their housing would recover, it would be fine. They would finally get out from under the college cuts and the college costs, and the kids would be on their own. And none of those things are happening. Kids are not on their own. Houses are upside down. They can't move, et cetera, et cetera. And they don't see the economy recovering firsthand. So now that the clock is ticking, and the reality of what they're going to need in the future with a shorter window is hitting them right, on a daily basis. We have 75 million baby boomers about to retire who are going to be very dependent on Social Security and Medicare, who are concerned with the whole entitlement funding and whether it's going to be there ever mind their own, three stool leg for retirement policy, whether they're going to be able to support themselves. So they're talking more and more. In my sense, but the media is not picking up on it. The media is just not talking about it to the degree that I think it's there. So I think it's the story over the next 6 to 8 months. If the market, and maybe what's camouflaging it too is the market, because they thinking, well, maybe they're not getting their share because the market's doing fine, but nobody's making any money, just the algo traders.
Yeah. Well, I think, Gordon, I think you mentioned a very key topic, which is the media. And of course, the media is owned by 6 global corporations, and the ties between media and the state, central state, the governments is very strong. And so it really comes down to what amounts to propaganda. And, I'll tell you one quick story. I was going through my dad's basement after he passed away a few years ago, and I found a box that had some keepsakes from his childhood, and there was a paper from the Depression era, 1937, and it had what really struck me was the paper had, here it is, the depths of the Great Depression. Things are not recovering, and yet they had some kind of glowing headline like, unemployment is down, or country finds its feet, and it was like not a fact-based headline, but it was like this, yay, everything's going to be fine, and I thought, oh my gosh, the propaganda that we're experiencing now is like a carbon copy of what they did in the Great Depression. They didn't solve anything, but they kept telling everybody it's turning around, and the light at the end of the tunnel, and so then what does that do to the person's perception of reality? That if they're told things are getting better and yet they're not seeing it themselves, then doesn't that actually increase their frustration and anger?
Exactly. Expectations. We have to break, but let me match you a story too that I saw on my vacation. I was talking to a friend of mine's daughter, and she's a graduate, been out for a few years as an intern, been interning, hasn't been able to find a job. Ivy League school graduate, but now she's on I think her 5th intern job, and she's working for a company that everybody, if I named, would recognize, and she works in their advertising department. And I asked her if she was going to be any chance of getting on full time, and she said to me, not a chance. And I was kind of taken back by how strong, how forceful she was in that comment, and it was actually a little bit of anger in her tone. And she says, "Gord, you know how many people are in the advertising department?" And told me it was 64 people. And she says, and you know how many of those people are full-time working for this corporation and therefore have benefits, are an employee, have vacations, etc. And I took a guess, and needless to say, I was totally off track. And she said to me, "Gord, 4." She said 2/3 of all the people there are term contractors. They come in every day. They have a desk. They're there 5 days a week, but they get paid based on contract work. And so if there's no contract, there's no money. And there's no money for vacation, and there's no money for benefits. And the other 1/3 are interns. And it's very clear that I will not have an opportunity to be full-time. So I says, well, you're going to have to move on. What are the chances of somewhere else? Because you're really, got some great credentials now. She says that all my friends are in the same boat. It's the same where everywhere. And her pressure she is under right now is, in fact, to move home from New York back to Boston, because her parents can't afford to carry her much longer. I mean, they've been doing it since she left home at 18 years old to go off to college. And she's 26, and now she's facing insurance costs that her parents can no longer cover, and so they need to consolidate her in their residence to be able to continue to fund it. And she doesn't want to come back. But I think that's indicative of that chart I showed at the beginning with the youth and the magnitude of the story that's just simply not being told. Charles, we have to break. We're up against a hard line, but this story on social unrest I think is a huge one, and it's going to be with us for a period of time. So I'm looking forward to exploring it with you, because your writings really, really bring out a lot of the facts and statistics on it. Any closing comments you'd like to make and about anything we've talked about?
I certainly agree that it will be the story of the next, I'd say, 10 to 12 years, actually. And I think I would just comment that there's 2 primary drivers of this inequality. One is the culture of corruption that we've spoken about. That the illegitimacy, the distorted economy, the moral bankruptcy. But then there's a lot of other issues that, like globalization and the structural problems of our economy, that are not the result of corruption. They are deep-seated, and just even eliminating corruption would not necessarily right the U.S. economy or return it to the golden years. And so people have to differentiate between these 2 drivers. And we'll talk about that in future shows.
The link between them is a fiat currency base, mm-hmm. where money no longer is a store of value, and why, yes. and what's behind why it's not a store of value. And there we get into distortions, delusions, manipulation, and so they are linked. They're inextricably linked, and we're going to talk about that in a next show. So I'm looking forward to that. Charles, we need to run it. Could you tell our listeners how they could learn more about your writings, your work, and the things that you're involved with?
Please visit me at of2minds.com.
Talk to you again.
Thank you, Gordon.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.